House prices in the UK jumped nearly 5% last year. Interest rates hit their highest point in 15 years. So why didn't the market collapse as everyone predicted? The answer is going to shock you. And what's coming next could change everything for British home buyers. Right now, the UK property market is caught in the middle of something unprecedented. Rates have been slashed twice since August, dropping from a peak of 5.25% down to 4%. Sounds like good news, right? But here's what the headlines aren't telling you. Mortgage rates are still around 5% for most buyers, and millions of homeowners haven't felt the pain yet. They're still on old fixed deals from when rates were rock bottom. That's about to change, because between now and the end of 2026, more than 1.6 million fixed-rate mortgages are set to expire. These homeowners are about to be thrown into a reality they are completely unprepared for. Monthly payments that were once £700 will suddenly jump to £1,200, £1,400, even £1,600 in some parts of the country. And this isn't speculation, it's already happening. Repossession warnings have quietly increased. Arrears are rising every single month. And while the Bank of England celebrates lower inflation, ordinary families are facing the biggest affordability crisis in modern UK history. But here's the twist almost nobody sees coming. Despite all these pressures, demand for housing is still strong. Why? Because the supply crisis is worse than ever. The UK is short of over 4 million homes, and new construction has dropped to record lows, even with higher rates. There are simply not enough houses for the people who need them. But this is where the real danger begins. For years, the government relied on cheap borrowing, low interest rates, and endless demand to keep the housing market alive. That era is over. Now, the Bank of England is trying to cool inflation while the government is desperately trying to avoid a housing collapse. And stuck in the middle are millions of homeowners who have no idea what's coming. Because when those fixed-rate deals finally end, the shock will hit all at once. And when it does, the ripple effect will spread far beyond individual households. Landlords facing higher mortgage costs will raise rents even further. First-time buyers will be locked out completely. And the dream of homeownership, something that defined the British middle class for generations, will become almost impossible for millions of young people. And while everyone keeps waiting for prices to crash, something even more dangerous is happening quietly in the background. House prices are not falling fast enough to make homes affordable, but mortgage costs are rising fast enough to push thousands into financial stress. This is the worst possible combination. High prices, high mortgage rates, low supply, weak wage growth. It creates a trap. A market where people can't buy, can't sell, and can't move. A frozen housing market. And historically, when the UK enters this kind of freeze, the eventual correction is far more violent. But here's what almost no analyst is talking about. The government cannot afford a major house price crash. Too many pensions, banks, investments, and public finances are tied to property values. So instead of letting prices fall, they will quietly introduce schemes, incentives, and rate cuts to keep the market artificially alive. But these schemes will not save everyone. They will only delay the impact. And delaying the impact makes the eventual fallout even worse. Because right now, the UK is facing three pressures all at the same time: rising mortgage renewals, rising rents, and rising living costs. And all three are squeezing households to the breaking point. The people who bought homes between 2020 and 2022, during the stamp duty holiday and ultra-low interest rates, are the most exposed. Many stretch their budgets to the absolute limit just to get on the ladder. Now they are sitting on mortgages that are about to become unaffordable overnight. And once thousands of these homeowners fall into arrears, The shock won't stay contained. It will spread into the wider economy, hitting banks, landlords, renters, and future buyers. This is why experts warn the real crisis hasn't started yet, because the true danger is not what's happening right now. It's what happens when the 2026 mortgage wall hits. That's when the largest block of low-rate fixed deals finally expires. And when that moment arrives, millions of households will face payment jumps that are simply impossible to absorb. This 2026 mortgage cliff is the single biggest threat to the UK housing market. Not interest rates, not inflation, not house prices, the mortgage cliff. And here's the part nobody wants to admit. Even if the Bank of England cuts rates again, it won't bring mortgages back to 1% or 2% like before. Those days are gone, forever. The new normal is 4% to 5%. That means the era of cheap borrowing, the foundation of the UK housing boom, has ended. And once that foundation is gone, the entire market becomes unstable. But if you think this is only a problem for people with mortgages, think again. Renters are already feeling the impact. Landlords on variable rates are passing every increase directly onto tenants. That's why rents have hit the highest levels in UK history. And they're still rising. In cities like London, Manchester, and Bristol, bidding wars for rentals are now normal. People are offering 6 months of rent up front just to secure a property. And this rental pressure is feeding back into the housing market. Because when renting becomes unaffordable, more people try to buy. And when buying becomes unaffordable, more people are forced to rent. It's a cycle with no escape. A cycle created by years of underbuilding, poor planning, and economic mismanagement. And unless something dramatic changes, the UK is heading toward a generational housing reset. A reset that will change who can own property, who can afford to stay in major cities, and who gets pushed out entirely. And while politicians argue, the reality is becoming clear. The next 2 years will determine the future of the UK housing market for an entire generation. If mortgage rates stay high, millions will struggle. If house prices fall sharply, the financial system will shake. If rents keep rising, young people will be locked out permanently. Every path leads to pain. But here's the final twist. The market will not collapse suddenly. It will break slowly, quietly, household by household, mortgage renewal by mortgage renewal, rent increase by rent increase, until one day we look around and realize the old housing system no longer exists, and a new one has taken its place. The question now is simple. Will you be prepared when the reset begins?